Welcome everybody. Welcome to today's daily EOD market recap for 22nd February 2017 and potential auction paths. Myself Dean, you can get in touch with me on Twitter or you can visit my website getthattradingedge.in. Softwares used for today's presentation are Bell Market Profile and Bell Order Flow. You can visit belltpo.com for more details on the softwares. Let me go through the disclaimer first. Information shared here is not a trading recommendation and we are not in the business of providing any. All information shared here is strictly for educational purposes only. Please use your discretion while acting on the information shared here. We will not be responsible for any resulting profits or losses. Please consult your registered financial advisor before you make any trading and investment decision. Let's go to charts. This is Nifty chart for today. Few things stood out. Let me point them out. First is we opened outside of yesterday's value area. Just like yesterday, we opened above the value at high. Today also we opened above the value at high, but inside the range. So opening inside the range in itself will tell us that the chances of dramatic move are not very high. So we opened inside the range and tried to drive out of the range in A period, but then we found some selling and we again came back down in B period, but the bulls had decided to mark the prices up. So the B period pullback also was bought into, and then we started one time framing higher till G period. So we were continuously moving higher. One interesting thing happened in F and G period. We get this kind of a matching highs in both F and G period, but some people may say that this is a poor high. I don't fully subscribe to the view. There are two sides to it. First is that we cannot expect the auction to go up and reject in the same 30-minute period. Auction does not follow our time frames. We have divided the day in 30-minute periods for our convenience, but the auction can go up and come down at any time it wants. So generally when this kind of a structure develops, it does not necessarily mean that this is a poor high. This high may not be created by time. It is just a result of auction finishing exactly at the end of this 30-minute period and reversing at the start of the next period. So this I would not consider to be a poor high. In fact, I would consider this to be a rejection, kind of a tail. But I mean, it's really difficult to just glance at a chart and decide that this is a tail. Similar development can be seen yesterday where H and I period formed matching lows. So this also I won't consider to be exactly a poor low. So we found then rejection at higher levels and the prices fell pretty sharply, and the rest of the day developed as a B shape. So after this rejection and two periods of sharp falls, market could not gather further confidence to move down and elongate this profile to the downside. We had marked this particular support in yesterday's recap. Then we said that below that we might test this, and finally this one. But what happens is prices come down and they just stall in this region and start forming a nice V shape. So this suggests that some higher time frame buyers were coming in this region, and they were absorbing the selling which was happening after this excess, kind of an excess at the top. uh, Higher time frame sellers came in and absorbed any selling that was going on from this top, and that resulted in a nice V-shaped profile in the later part of the day. Now let me just clear everything up. Going forward, I feel that this V shape is important, and if we need to move down, we need to find acceptance and new business below the low of this B, or if the higher time frame buyers have bought it, then we might go and repair this particular high. Now, not because it is a poor high, but because this is the point where long liquidation began. And generally when smart money comes in, steps in, then it generally has a tendency to take out the point from where the long liquidation began, and hit any stop losses that might be accumulated above this high before deciding on further course of action. So as Jim Dalton puts it, this might be the uh, immediate business going into tomorrow. The immediate business is attended by the market first. So the immediate business is to balance out this inventory imbalance and take out the stop losses above this high. Now market may just continue higher after that, but there is also a chance that if there is no new business found above this high, then we might just take out the stop losses and fail, then come down to test this particular high volume node and check whether buyers are still you know interested in higher prices or not. So we might just come down, test this region, and then again move up. So these are the possibilities. Now long liquidation and profit booking are two different things. I got a question on Slack stating long liquidation means that longs have booked out of the market. It's not the case. Actually what happened was market opened inside the spike and we got these double prints inside the spike, so we immediately could make out that smart money is interested in higher prices. And then what happens, as we start moving above the highs of this spike, momentum buyers, breakout traders come in and join these buyers in pushing the prices up. At one point it so happens that the smart money feels that the price is too far extended away, because the last value, as you can say, was down here. So smart money felt that we are too far away from the value and they stopped supporting the price. Now smart money being smart money and having deep pockets, they can sustain a few points, even a few 100 points against their entry prices. So what happens is they stop supporting the prices here, and all these momentum buyers, they get stuck. And this kind of a rapid fall is always a sign that this is emotional selling. Stretched out bars is always emotional selling, and these were the trapped sellers, trapped buyers who found that the price has stopped going up and then they rush to exit. So this was not profit booking. This was maybe in this general area. You can draw this particular box, and anybody, let me change the color, draw it again. Yeah, Anybody buying in this particular region, when the smart money stopped supporting the prices could not go higher, and anybody who had bought in this region, the late buyers had to cover their positions. But as soon as the smart money saw that these late buyers and momentum buyers are flushed out of the market, they immediately stepped in and started accumulating their long positions. So it's not profit booking, but trapped sellers, rushing for an exit, and their exits being, used by smart money to create their slightly longer term positions. So this is Nifty. Uh, these are my hypos. We might continue the up move if the buyers are strong. There is a possibility of a failed auction above this particular high. If we do not find new business, then we might come down and test buyer interest here. On the downside, we have these clustered lows in this region. So there is every possibility that smart money would not immediately mark the prices up, but push them down, take everybody out of the market in this zone. Maybe there is a possibility that we might test this particular area and then move higher and complete the objective of trading above this high. So that is a possibility. These this one and this one, let me mark this one and two are bullish possibilities. This three would be bearish intraday, and this four would be uh, a bearish outlook for the test of lower references. So that is Nifty. Let us go to Bank Nifty chart, see what Bank Nifty did. Now Bank Nifty is a very narrow profile, very unlike Bank Nifty. The range was very narrow, and immediately it tells us that whatever bulls came in this region, whatever buyers came in this region and pushed the prices so far away from value, could not gather any continuation or momentum today. So this particular action might just be smart money trying to force early shorts out of the market, taking prices higher, hitting stop loss above this high, and whoever was buying on the possible breakout of this particular high, where the whole day smart money was supplying them with shorts. So anybody who thought that we have a breakout above this particular high, these two clustered highs, and we might move higher, every time the price moved higher, smart money was there supplying them. Let us just split the profile. See, intraday I marked this particular range, and it suggested that the smart money was not in the market. Otherwise we would have seen, prices extending higher, but every time it came here uh, at the initial balance high, since the smart money was not supporting the price, weak buyers could not push it above the initial balance high. So we created these kind of a clustered highs. This is a clear example of a poor high. Unlike Nifty, we have not adjacent time periods trading at the same levels, but we have some time periods in between. So A, D, and F, they form a poor high definitely, and this was a sign that weak traders were booking out at these particular levels. Then we came down and could not extend lower also. This particular high volume node was there, which, the buyers who came in late on this day, they also supported the prices. Or maybe somebody shorting going into the close, finding prices trading higher most of the day, and then returning to their price, they were just, getting out of their shorts and buying here. So there were not clear shapes. We can argue that this was a P, and this might be a B. But again, the range is so small that it's not very wise to try to find patterns when there are none. It is better to look at this profile collapsed. You can observe a nice D-shaped profile with a nice prominent POC. One more point of observation, which is a subtle nuance, as you can call it. This is the price point of control, but look at the volume point of control. It is not at the same level, it is actually lower. So this is always, not always, but most of the times it is an indication what the smart money is doing. The volume point of control always leads the market. So we might argue that smart money has accumulated their shorts in this range, and now they might push the prices down tomorrow. So for hypos, again, my analysis tells me that this is most likely distribution going on in the markets, but again, we cannot be sure whether this is a distribution or reaccumulation until we find what is the follow through. So the drill remains the same as in today's profile. If we start finding acceptance below this level, then there is every chance that we might come down and test this high volume node and this point of control. So that is the bearish scenario. So finding acceptance here would lead to test of lower references. There is another potential important reference here also. So we might come down and repair all these kind of anomalies if bears take control. A lesser likely scenario is prices opening higher and moving straight away up. Anybody shorting in this range is trapped, and their getting out of the market will push the prices higher. This is less likely, but if we open in this range, then we might see this movement coming. Another possibility is this is a nice balance, and balance have a tendency of continuing, so we might continue for a while. Then there is a possibility of a move up, generating a nice D profile, D shape profile, and then finding rejection here, we might start moving down. So these are a few possibilities for. On the contrary, if you get this kind of extended balance and you break down sharply, then one of these supports may uh, see buyers returning, and then in that case this will be a Q profile and we will again move back to the value. So these are a few possibilities on bank nifty, and let me briefly go through the order flow charts for today. Okay, there was this, oh no, let me share a 3-minute order flow chart. Where is that? Yeah, this one. So on a 3-minute order flow chart, where is that? Sorry. Yeah, this one. This is the first break which happened, and it saw prices plummeting down. Again, the same drill, seeing most of the red trends clustered at near the lows of these bars. So sellers were, momentum sellers were piling up on the shorts. This is also called as getting short in the hole. Again, we come down and test the same level. Again, same phenomena, shorts accumulating at the lower end. Just observe the delta figures, heavy negative delta here, but on the second attempt the delta just rise up, and that is a sign that uh, shorts have given up on the downside, and there is a likelihood that we might go higher and test higher levels. Same thing, this particular low was there, prices again came in that region. Here we could not spot a delta divergence, but there was a nice test in this region, testing previous lows and not finding continuation. Let me just draw okay, not here. Yes, yes, this was the earlier low. At this particular point in time, around 215, we broke below this low and immediately moved back up in this particular bar. And the very next bar, what we have is a down bar. You can see the range is smaller than prior two bars, and also the volume is lowest of the prior two bars. In fact, it is falling, consecutively on two bars. So this is a classic test formation where, smart money is after this sharp mark down, just testing whether there is any more supply left. So we have a down bar, but the close is of the lows, the volume is lower, and the spread is also low. So that immediately alerts us to the fact that sellers are exhausted. They don't have any power left to push the prices down, and immediately we go back up and test the volume weighted average price like we did here. This was the second test, and I had put out a update on Slack that if we cannot take out this VWAP, we might again test the lows. That again happened, and going into the close, we have moved higher a bit, closed off the lows. So this particular B shape is the reason for that. And tomorrow we need to see whether we start finding acceptance below this, test below or fail, or directly go up and repair this high. So that is today's market reading from my side. Any questions are always welcome in Slack. I have shared a small survey form asking for your feedback on your experience so far in this Slack group. If you find it interesting and value adding, then please fill in that particular form so that I get some encouragement for the efforts I am putting in. Thank you. Have a nice day.